Most Aussies know about the medical levy surcharge, but not the full impact of skipping private hospital cover. If you don't get it by age 31 and decide to take it out later, your premium could face a penalty loading of up to 70%. The longer you wait, the higher the penalty. In this video, I'll go beyond the surface of this penalty loading, explain why it's time critical for many Aussies to reconsider before the start of the new financial year, and offer a framework to help you decide if private hospital cover is worth it. Let's dive in. What is a penalty loading? The penalty loading in question is called Lifetime Health Cover Loading, LHC loading for short. It's a government initiative to encourage people to take out private hospital cover sooner rather than later and help ease the reliance on the public system. If you don't have private hospital cover by 1st of July, following your 31st birthday, and decide to take it out later, you will pay a loading of 2% on top of your private hospital cover premium for each year you were age 30 without it. For example, if you take out private hospital cover at 40 years old, you could pay an extra 20% on the base premium per year. If you wait until 50, you could pay 40% more per year. The maximum loading that can be applied is 70%, and it is only removed once you have held 10 years of continuous cover. To understand the full picture, here are another 5 key facts about the lifetime health loading you need to know. Number 1, this loading applies only to private hospital cover. It doesn't apply to extras cover. Number 2, if you're on a couple or family policy, your loading is calculated as an average between the individual loadings of the 2 adults. For example, if you have a 10% loading but your partner has no loading, the loading applied to your joint policy will be 5%. Number 3, the government does not pay the private health insurance rebate on the lifetime health cover loading component of a policy. Number 4, in some cases, you may be exempt from this loading or fit into a special circumstances category. Check out this page for more details. Number 5, if your circumstances are not straightforward, this calculator takes into account all the complexity and can help determine if you need to pay the loading. Now you understand the essence of the lifetime health cover loading. Why act before the new financial year? Well, on 1st of July 2024, Aussies born before 1st of July 1993 will all be over 31 years old. If you are in this age group and still without private hospital cover, there will be a 2% increase to your lifetime health cover loading on this date. This increase will continue at the start of each new financial year until you get cover, regardless of whether you need to pay the medical levy surcharge. So time is ticking. If you're still unsure despite the looming loading, you might be wondering, is private hospital cover actually worth it? Let's explore a simple framework to help you answer this question for yourself. We will look at both financial and non-financial considerations. Financial considerations. Number 1, medical levy surcharge. If you have to pay the medical levy surcharge, the decision is simpler. Basic hospital cover will likely cost you a similar amount or even less than the medical levy surcharge. Number 2, lifetime health cover loading. Even if the premium costs slightly more than the medical levy surcharge, or you don't have to pay the medical levy surcharge, consider how likely you are to get private hospital cover in the future. Your income might increase, forcing you to get coverage to avoid the medical levy surcharge. You might reach a life stage when pregnancy cover becomes important, in which case you will need to get the top level of private hospital cover. You might develop health issues and want to avoid wait times for elective surgeries. Remember, the older you get, the higher the base premium will become. The longer you delay, the higher the penalty loading will be, and it will stay with you for 10 years. So if you think you'll need private hospital cover in the lifetime health cover loading territory, assess now how that loading will impact you long term. Non-financial considerations. Australia has a world-class public health system that provides timely and free treatment for emergencies, major illnesses, and trauma in public hospitals. Therefore, it's understandable why some people without private hospital cover manage just fine. However, there are 3 non-financial benefits of having private hospital cover that are worth considering. Number 1, having private hospital cover means you can be cared for in a private room of the hospital of your choice, and you can choose your own specialists. Number 2, for non-life-threatening conditions or non-immediate emergencies, going public means you have to wait a long time. According to the Australian Institute of Health and Welfare, elective surgery waiting times were at their highest level in 20 years during 22-23 financial year as public hospitals worked to catch up following pandemic-related delays. You can find information on waiting times by procedure on their website. What's the cause of waiting? Physical and mental pain, a slower recovery process, and potential setbacks to your career and income. Number 3, given the first 2 points, the peace of mind that comes with private hospital cover can significantly reduce stress and anxiety during health-related situations. At different stages of life, your opinion on private health insurance will change based on your income, health condition, and risk appetite. Curious to take a peek into someone's life and see how their private health insurance decisions evolved over time? John's story is an amalgamation of many real experiences shared by people online. If you are interested, be sure to like and subscribe so you don't miss the release of that video. Thanks for watching. See you in the next video.